Hello everyone, in today's video I will be covering one of the topics that has been discussed a lot lately, especially on the YouTube channel, or Carlos has been commenting on it quite a bit, and I think it's one of the issues that has made us to level up quite significantly in our number 3, trading, which is how to study the price action of M1 and how to trade it. It's one of the things that has definitely changed our style, as those who have been following us for over 4 or 5 years know, since we've been posting content on social media. In the English section, we initially came from a more swing trading style. Then there was a transition to very small time frames, but keeping those swing trades of 1,100, 150, 130 in a period of 2 to 3 weeks. And then there has also been a small transition. What has happened is being a trader who would especially bring in the session. So what is this transition from swing trading to swing trading with a specific entry on M1, M5, which gave us very large ratios, and now specifically trading more about 2-3 hours. This is because when we study our journal, when we study our data, both here and like I said, we saw certain inefficiencies in maintaining trades around 1.20 to 1.30. And more than what the ratios were, the ratios are fine if you can achieve them in a couple of hours. Short period of time, or maybe some. Maintaining a certain volume was more about how many days we were going to hold on the position for them to pay us. One of the issues we also faced with this inefficiency is that not all the trades, from a statistical point of view, they will go to that final take profit, they will go all the way to that final point. Third, fourth, fifth take profit, each as defined. So one of the things that happened to us was that when you analyze more than 1,000 trades, you realize that most of our trades, especially, they stayed around that 1.8 to 1.10. Okay, so what we had to do was adjust that a bit to be more efficient in our strategy and therefore grow our portfolio even more, in a more exponential way. Since we don't leave so much money on the table waiting for those trades to hit 1.20, 1.30, 1.40 on a period of 15 days. So with that said, that's the reason for the video. Today we are going to look at what is more of an intra-session. In this case, it's going to be euro-dollar. It's one of my favorite pairs, and what we have on screen is an opportunity from this week where we took both the sell and the passes. Important and worth mentioning, we have a system specific when managing trades where we aim for a 1.3 and then a 1.10, also on the volume, and then also there was a system when entering that counter trend trade that we see on the screen, which was from New York. I mean, first we get the London trade, which is a high probability trade, including the intraday cycle, including an intra-session style, as I've been mentioning. And as we see on the screen, understanding very well and in great depth what the M1 price action is. Okay, now I'll jump to explain a bit more in detail, but as we see on screen, we have that first sale, which went for 1.10, and then it closed there. And then we had the purchase, which was a 1.3 at first. Then it went up to a 1.8, and then we let a small volume run like hatch up to 1.13. Okay, this case had 3. So whatever we're going to be explaining this trade here. First, what are we going to do when we want to understand the M1 chart? Understanding the M1 chart has the same fractality as understanding an H4 chart. In our experience, it's almost easier to understand the M1 one, as it will give you that first momentum, that first acceleration, compared to when you understand the H4 one. What it allows you when you deeply understand such small time frames is that you can go break even sooner. You can have that moment, a first direction, and therefore it gives you a small benefit right from the start when you have it. Other ideas in smaller time frames like M15, H1, H4, which also make you set larger stop losses. When you have a larger stop loss, it means your area is not specific. When it is not specific, it means you should let the trend breathe. Something that we don't do. We know it's a specific area and it requires an instant reaction. Therefore, it allows us to have those stop losses, which in a pair like euro-dollar, as we see on the screen, it's all in. On average, we have about 2.5 pips. About 5.5 pips is roughly where we move. Typically, I set it between 2.5 and 3.5, but generally for that scale, 2.5 to 5.5 is where we're comfortable with a stop loss. In a pair like euro-dollar, so we're going to jump to euro-dollar. As I was saying, we can start even before the M1, we can go to M5 to understand the graphical protocol. You see a bit there from previous analysis. It's been a bit of the week that I've been trading, and that trades I've been taking both buying and selling here, etc. But we are going to focus mainly on this one, which has been a pretty good day, which was this week's Thursday. Alright, I'm recording this on a Friday, so the price action is very recent. First, as what we see here, we had a pretty significant liquidity pool, and after this significant liquidity pool, what we see is how price action comes and takes liquidity. It makes a small move. This happens during Asia, which doesn't also affects us. Understand that it could be like that. It is significant when we consider a liquidity high. And not only that, but it comes, I will remove this liquidity, I'll keep moving in terms of liquidity as well, which is quite important to understand more deeply. So it comes and pulls this liquidity from this trend line that had 1, 2 and 3 touches. Those of you who follow this channel know it's something we look at quite a lot, and there's a specific video talking about it. So I pull this blender out, it comes to mitigate a small area of demand and then can generate a higher high. That higher high takes out the liquidity from Asia, and also important is a trade from Frankfurt, not London. Alright, the first one happens, but I didn't catch it. But to understand it, okay, now let's skip to M1. And now I'll be covering all this point in detail. So, first thing that happens is, as we say on screen, or as we see on screen, it's the Frankfurt trade. Frankfurt trade is at 8 in the morning, where we have a liquidity grab, a small break of structure, notice the liquidity. That liquidity pool is also formed based on the trend line. So once you take out this liquidity, we should be moving during a counter move. If you don't take the Frankfurt session because it's not to your liking and prefer the London session, which I will be covering, another push, and after having this momentum, it breaks down. When it breaks down, look, it comes to a demand zone. Why a demand zone? Because previously it had taken out this pool of liquidity. What's the trend line? You draw it and it already generates the movement. Important, why do I consider this a potential smart money trap? Because this movement has already happened, having already happened and taken the liquidity of an industry. Okay, so here we have the inducement. This is the point of liquidity that takes out the highs that were mentioned at the beginning of the video. Once this happens, the price can come here, like a point of demand, but we can consider it weak demand. Demand devil is a smart money trap. It's an area that can give a reaction but shouldn't be sustained over time. That's really important for our analysis because it will lead us to understand that just because it's a point of break, money doesn't mean it should be a trade that generates higher highs. And this is where we, from a point of view, from M1, we will start rating the London trade. So let's assess the London trade and enter at this point here. I'll move it a bit so we can see more of the M1 price action, which is key in this trade. So first of all, I have this point here that pushes and breaks downward. Yes. Breaking downward or generating that lower high that creates a lower low. Structurally speaking, we obviously have internal order flow. That's there. Perfect. By mitigating, a generation of liquidity starts and we begin to see the price start to rise slowly. And not only that, one thing that caught my attention quite a bit is that this high, it forms a higher high, so we have two highs, which indicates a liquidity pool forming, and notice how it makes a small intention. The structure break here is where many people in smaller time frames get confused. In terms of intraday cycle, liquidity cycle, it can jump in what we also call smart money. In the end, the market is fractal and this area can turn into a smart money trap, which we had already identified and knew about. It shouldn't hold over time, but it can also happen along the way in M1. So look, it breaks down, but what's important here is that it breaks down. And remember, the price induces so that it induces because it needs to get that gasoline that moves the price like a car that is. Every time it induces, think of it as fueling the car, so the car can move. So does the price induce this low, mitigating a demand area, and we are inducing a drop first because here we have only generated higher highs. So we know that when this point is forming here, the price is what allows us to jump to the next step. That is when the price is rising. I already know that this supply area can be high probability, but when this is happening, this type of pattern is what still, it gives me a higher chance to set a limit. So also very important is the timing at which I set the limit. I do not set the limit for my entry In this case, the moment I see that the price is around here. Okay, let's suppose it's around here. I won't go in with the limit already up here. I'm waiting to see what kind of setup I get and if I'm going to use a short-term entry or if I can enter with a limit order, since it is giving me a smart money trap pattern from here. Case in point, that's what gives me extra confidence. I'll move in when the price starts to go up. I can place the limit here referring to the perspective of this supply zone, which is where we placed it, since we know we are now inducing these equal highs. We are also catching these smart money trap traders. And in this way, by entering into a smaller inducement, that understanding allows me to know that I will have this drive. That's why I mentioned it's one of the keys. When you enter smaller time frames, you understand in detail what is happening in M1. Sambil tonton-tonton perlu introduce does not become risky in our opportunity. Opinion, like many people say that theorizing these time frames can be risky. Trading these time frames can be risky if you take the M1 time frame. You try to enter any kind of spot because it will lead to more errors since the price is moving every minute, which gives you room to make a mistake every minute. But that's not the point. The point is, watch the M1 price action but enter with caution. And with criteria, we're not jumping at every lower high or lower low or every higher low or higher high. We're jumping at a point where intraday cycles are being made, liquidity cycles. Point where we know there's a high probability of reaction, and on top of that, when we set the limit, it's very important to calculate what would my stop loss be. Here we see that my stop loss would be around 3 pips. Perfect. Let's see. It would be around 3 pips. Then I also calculate what would my trade potential be. So as we knew, we have a break-even system first, which is when it breaks that low, then I can go break-even, which is around 1.2, and then we can also get paid at 1.3. It's a way to have a system, especially for people who are watching you. I hope you get good trades, but the week is ending. And if you're negative or breaking even, one thing I'd add to the plan is having a much more rigid system regarding trade management once in profit, that is once you are already benefiting. How am I going to manage my position? If you see that you are getting good trades and that your account is not growing, I would maintain a much stricter system regarding 1.3 my payment. 1.10 I get paid. Something much stricter and not based on liquidity points or points that are a little more subjective to each person, since it isn't working. That's in case it doesn't work. If it is working, obviously, perfect. Then here, as I said, we had another take profit at 1.10, which I am going to highlight here. And also the reason is because, well, it breaks this smart money trap. We take out this liquidity low, and when the price starts to drop, we see in our direction our next liquidity point to take was this low, which you can see also has a small trend line, but anyway, it was up to here, which in the sense is a perfect trade as far as a 110. It has targets from 1.3 as well as from 110, as you can see. What I meant by session is because we reached this 1 to 10 in 2 hours. Perfect. So we also want those high ratios in a short time, and above all with a well done analysis, alright? With an analysis understanding about why this area could be a potential smart money trap, how liquidity is being generated upwards in M1, what it validates leaving the limit since a smart money trap pattern is forming on M1, which can be useful for smaller inducement and therefore going in my favor then with momentum. All those kinds of things I've already talked about. So with this we jump to the next thing, which is when we look at the price on M1. Okay, Logondo. Okay, when we look at the price in M1 after dropping so much in a single session, what we need to see is what time during the day we might have a pullback, which is New York, because it's the next session. So New York could be a pullback or a continuation. Then depending on where the price is at, I will determine whether we can treat it more as a continuation or a pullback. Being in profit or in the gain zone still leaves me a bit more confident to look for a hedge, but I need to understand that New York can have a counter trend, meaning just because it's sold in London, I shouldn't be looking for buys in New York. Because I want to do that hedge, I have to understand the price and see objectively that there might be a pullback. So when I look to the left now, what happens? Alright, I have lows. I'm going to delete this for a second. I have a low here, and now the first question you can ask in your mind is why this low? And for example, not this low. right? And why not this low, right? So there are several lows. Why do you specifically choose that one? Well, let's see. I choose this one specifically for several reasons. Notice I left the horizontal lines so we can see why I choose a low in the next one. So by the way, if you're enjoying the video, give it a like and subscribe, because as you can see, I'm going into quite a lot of detail. I think it's going to be very helpful for all of you, so please let me know in the comments if it's working for you, this style of case, and you are learning about smart money traps, how to understand them, the pro trend or counter trend within the session, and the other issues we are discussing in the video. Equal lows. There's no. Look, okay, the first thing is to notice how the price is starting to move, generating this type in M1 like lower highs, lower lows, higher highs. And now we see the beginnings of accumulation. Not just that, it comes and creates equal lows for me. Very interesting. We need a prior build-up before an inducement. I have a liquidity build-up, I have equal lows. Identical, look at this. As the price aggressively moves down, I like it because the inducement ultimately is to drive traders in the opposite direction. That is, when people see this kind of move of aggression, the place where people are going to jump is in, from a smart money point of view. That's why I have it in purple. People will try later. Those who only look at M1 would jump into these sales, but what we understand is that we are inducing a low and then we have to match the time of day. In this case, we already have it with the indicator, which is our New York trap. Here, what happens is that I have a small pattern in minute 1 and smart money trap hasn't arrived yet, allowing me to enter. My entry was from New York here. Okay, notice the importance of the time of day. The time of day with this induction and how the London session had been so bearish, I knew it was inducing. New York time with a previous build-up of equal lows liquidity, with a vector that aggressively breaks the price at induction and moreover gives me an entry pattern. So with this entry pattern, okay, then you can also go later. That's the deal. You can go up to 113 and cash out quickly, as I always say, partially in the smart money trap. And then you can also see it from an intraday liquidity perspective that you're in M1. Another liquidity trend line is being generated there. And you can cash out at the next point, which would already be at 1.8. So it's an amazing trade in barely just 55 minutes of important understanding of the intra-session sessions with good ratios, and then also a small, when you look at what the entire main impulse is, by main impulse I mean that this started here and has driven up. Up to here, Shamaste, we were trading based on internal factors. As we know, the price could come down to those levels. Not only that, but when it comes to these supply levels, notice that there's also a buildup of liquidity with equal highs. Check out the aggressiveness of the vector candle, and then the price can generate a counter movement from that level is worth it. Obviously, we were already entering Asia before the price sets a bit more in range, and we shouldn't trade it, but mainly to understand the concept, it's the same thing that was happening here. Alright, notice that before inducing, it generates equal lows. We have this vector candle, and therefore we will expect an opposite move. Equal heights, you see the vector, and we can expect an opposite movement obviously in certain areas, in important areas. So that's why I was saying we could even push the trade to slightly higher levels that would have given us a 1.12. So with this we'll leave it. I hope it has helped you understand M1. As you know, very important to understand it. It seems to us a way also to trade much more efficiently. If you know what you are doing and know where you are looking for it, you will be trading on H4, H1, M15. So I hope you found the video helpful. Let me know in the comments and I'll see you in the next video.